Good morning, everybody. This is the first time that I'm gonna doing a video in full English. I had some friends that they was asking to me if I can doing some of these videos the weekends on English. Just to let you know, my first language is not English. My first language is Spanish. My second language is English. And like you can notice, I had a very heavy Hispanic accent. My kiddos, when I was young, they used to laugh every time that I speak English with them. But still, I'm gonna try to do it this weekend, and every weekend I'm gonna try to do in English just to my English speaker friends. Let's see how it's going. Maybe in the future I can becoming better at this, or maybe not. Just to let you know, my name is Jorge. I'm not a professional advisor on the stock market. I just only put there some ideas just to make fun. I put some ideas how the market can go. And in general speaking, it's very good and very pleasant to doing this on English for you. But anyway, just to mention it, this joke here is about the day traders. I'm not a day trader. I am a swing trader. There is going to be some concept that little by little we can learn and understand. And everybody thinking that there is only two ways to see the market, the bullish, the bearish, but there is another way to see it, that the kangaroo. But this is very interesting. The last 2 weeks actually was a kangaroo market. What does mean kangaroo market? Kangaroo market means, as I put the SPY on daily basis, it means that for these 2 weeks, look, it's just moved the market between 642, 542, according to what we can see here, and with 549. So it's only 7 points. It was going up, going down, going up, going down for the last 2 weeks. And the market is kangaroo. We had to be very careful on the kangaroo market because it's when the market you can lose more money. I didn't lose money. I learned to how to move it in every environmental of the market. Used to the guys who start to see me, I doing a ETF, something that I call speed APC, ETCs. What is mean that the volatility of these APCs is bigger than the regular volatility of any other two different ETS. For example, the S&P SPY, they only had a volatility of 0.82%, but I don't trading on the SPY. I trading on, for example, on this one, that's the same SPY, but it had more volatility. Including on NVIDIA. I don't trade in NVIDIA. There is a ETF on NVIDIA that the volatility is 9.4. The ATR is 9.4%. 9.4% is a lot of volatility. NVIDIA only have 4.5 points on volatility. Just to give you an example, I treated on volatility, but you have to be way more carefully the way that you are doing it. Anyway, start by introduction. I had some format. My format is I compare some economic information, compare some statistics, some numbers, and go to the numbers, to the graphs on the trading, to the graphs of the market. That's the way that I do it. But I always start with some reflection. The reflections to today is about this. If you go into the market, you have to be consistent, you have to be disciplined, you have to be focused. That's very important. This is a long run thing. The market is not something that you learn in 1, 2, 3 weeks. It's something that takes years of watching the market, until you get the skill to compete with the market. You can win in the time $10,000 daily. Just to give you an idea, $10,000 daily on the market. I winning normally between 2 and 5% of my total capital on the market. 5 to 10% of my total market because the 8 years that I do it. But this is a long-term skills. I already had three 3 years and a half working in the market, or try to analyze the market and go and see it and start learning a lot of stuff, learning how to control my emotion, because on this you have to be consistent, disciplined, and focused. Saying that, what is the state of the economic that we going to analyze this weekend? The consecutive days that with the price and Brent is moving in opposite direction. What is, but here's a new concept. We had already a lot of days in opposite direction. What is this concept? The concept that we're going to work in is Brent. Let's go and see in here. This graph is for CNE, Fear and Greed Index. Right now, the market is fear, and it doesn't matter if the market is continue going up, that is extremely greed, but in general, it's still on fear on neutral. Actually, we have some days, a lot of days, it's started May 29 to go to the fear neutral, and it's jumping around this proportion of the market. May 21 is already 2 weeks. And now you can see the last 2 weeks on the S&P 500, SPY is like that. Is kangaroo. It just move it on between any range. And yeah, it doesn't matter if the market is continue up. The big reason, or one of the reasons that the market is not that good is because the stock price spread. What is mean that spread? It's saying here, the market is made up of 1,000 of the stock. In any given day, investors are actively buying and selling the stock. This measurement look at the amount of volume and share of the New York that are rising compared to the numbers of shares that is falling. What it means that? It means that we had some stock that is going up, but we had more stocks that is going down. Oh, in other words, we have some stocks that is going up on this breed, but a lot of stock is going down on this breed. And we had a lot of days doing that. But what stock is continuing up? Well, the stock that is continuing up is basically the 10 biggest stock. That's the one that continuing up, and technology the stock, they continue up, but not all the market. And we can see here on the graphs, just to give you an idea on the S&P SPY, it looks like it's going up, up, up. Let me put this on a line. Let me put this in a line. It's going up, 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 up. Let me hiding the other lines. You can see that the SPY is going up, 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 up. But is we adding here the SPD, no, what we are is we adding here the RSP is the same SPY, but all the stock weigh the same. Is we doing this, we can see it that we start to have some separation. Normally in the history, these two going together, but we can see right now that we have some separations here, which means that the separation on this point is around 5%. The separation on this point is around 10%. We had a 10% separation between the SPY and the RSP. What is the RSP? Let me take off this one. What is the RSP? Let's see it in a different way. RSP is the same SPY, but in equal weight. So it is more companies who is pulling down the market. Only few is pulling up that spread on the market. And we can see it also in a different way. Look, we can see the total market. Only 44 of them is over 50 days average, about 50 days average. Only 100 then is about 100 days average. The only 46 of them, 46%. And well, over the 200 average is about 54%, but in the SPY, only 46% is over 50 days average. Half and half is over the 100% in line average. And only, well, 67 is over 200. But we can see also on the Nasdaq. The Nasdaq 48% is over 50 days average. 47 of them is over the 100 days average, etc. That's bread. It's only some of the companies that is pushed up. Not all the companies is pushing up. It's only some of them. And we can see it here. Microsoft, Apple, Nvidia, Google, etc. Around here, you can see the year to date how they are doing, these companies versus the rest of them, how they are doing. We can see it that it's very few who is doing very, very, very good, on the market. That's bread. That's bread, the separation. Actually, the percentage of the stock that is going up versus the one who's going down is about the 30% on 2023, and the year to date is about that. Is not very good. The only time that is happened that is here. In 98, 99 is before the recession, the dot-com recession that we have it in that time. Just to give you an idea, here we can say only the 10 biggest one is push up the market. The rest of the 480, not very good. This is bread. And we can see it on this, the top 10, they had a better, in the top 10, they had the last 12 months, they had a better price versus earnings, better 27% or 27 price versus earnings. In 2020 it was 29, and here it was 24. But the rest of them, they have this 18 only a price of over earnings. Wow. This the top 10 is doing 37.5% up of they weigh on the S&P 500, they weigh 37.5. It's very heavy. Very few companies, they have a big part of the SPY. We have to be careful on this. And we can see another way to see it. Only this company, they already winning 38% of the market versus the rest, 495, they lost actually 5%. That's bread. The bread. They had a big separation between some companies versus the rest. Not very good of the market. That's why on the market, we continue seeing this jumping between fair and neutral. This jumping, constantly jumping, because they're not very confident on the market that the market can continue going up. And we have to be careful on that. Here, another stuff, the volume is in the edge or is in the top 10. The volume of the trading on the market, the other, they don't have that much volume. And we have, we are very tall, we're very high, but we had many days, that we are under the 52 weeks average. Now, this is just to give you information. The bread did not look very good. That's why on the neutral, fear is jumping. It's continuing jumping between neutral and fear. So the market did not look very good. Thinking about bread, just to get the note, is that means that the next week the market is going down? No, not necessary. Is that mean that's going to happen the rest of the year? No, not really. That's the big day. The other thing is the volatility of the market. What is the volatility on the market? Let's go here. Is this value, this one? This one is volatility. And this volatility actually is coming very bad in election days. We have 24. We have another election day, was 2020 here. On 2020, February 2020, March, April. The last election year, let's go. The last election year, it's days. Let me go to weeks. It was 20 here. We had this volatility in the last election year. This was the pandemic thing. This was volatility. There was election years, and after that, everything is kind of steady, you know, kind of steady the last election year. So the volatility normally in election years is going up, 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 up. So we're gonna see it the next year that the volatility is gonna coming up. We can see here the futures also they're gonna have more volatility, more trading between June, September, November, July, September, November. You know, we're gonna have more volatility little by little, and we can see it here that the last three elections years 2020, look the volatility that we had before the election, September, July, August, September. In 2020, we had this volatility. In 2012, we had this volatility. So normally July, August, September, the volatility starts to speed up. What is means volatility? It means that the market can drop it a little bit or can go also high more, because the volatility is up and down, in not only in one direction, can be up and down. So we're gonna have more and more the months with more volatile days, and everything start on July. July we had the election season start on July, and but in July also start the buyback. So the big companies start to buy back all the stocks, so they can hold in, they can play with them, we can manipulate the market. That's the reason that they buy back, and they're gonna start it. They already started, you know, the buyback, and right now we going to July 2, you know, so we had to see it how much they continue buyback, and that's how gonna help to the volatility. Now the biggest one companies, the big companies, let me go in this here, the big companies. What is the big companies? Microsoft. Look, we have election, the earnings is the July 23. Apple, we had the earnings on July 24. Nvidia, we had the on, well, August 15. Amazon is gonna be July 25, 25th. Google is gonna be the earnings on July 23. Meta is gonna be on July 24, and Tesla is gonna be on July 17. So the last 2 weeks, or in 2 weeks, we're gonna start to see the big earnings season, and we had to be ready to that. You know, if we had to be ready, it's gonna be very volatile. It's gonna be very a lot of movement in the market. You know, so and we had to be ready to that. Now, well, we can see some info about how the flow of the money is going, and it was get out from the technology and go to the other market. But anyway, now finish on this big stat that I mentioned it to you. This is the seasonality of the S&P 500 index. This is the seasonality. We're going to July, and July normally is going up like crazy, but in election years, July is a little flat. You know, it's a little kangaroo. It's a little flat. So we're gonna have to be carefully. But this year is just coming like this. It's coming very strong. It's coming. Wow. You know, the percentage of change was real big, and we still not going to the rest of the year. Here it says that maybe we can on have a pullback because the first 6 months it was real high. Let's see what happened on the market. But something for sure that statistics says to me, but this is only statistics, you know, that when we have consecutive quarters with plus 10%, that was the first and the second quarters of this year, we have more return than next ones. The next 60 months, we had a bigger return, is 92.6, and the 12 next month, we had a very good return. So can be a very good year, is gonna be a very good year, and gonna continue. One more thing, July 1st, that's gonna be tomorrow, we have is the day more bullish during the year. It's a 90.5% opportunities to be up the market. On S&P 500, on the Dow Jones is the 81%, and then the Nasdaq is the 85.7%. Wow, it can be a very good day to borrow, just to mention it. And there is another statistic, because also this week we had the 4th of July. And according to this, in S&P 500, the first, second, and third actually is positive, the three. Look the positive that they are, but not very positive the Friday after the 4th of July. The Friday is not very positive. Actually, it's a lot of reds here. It's only 38.5% that being positive. And 53 is going to be the next Monday, and 61 and go on. So it probably is going to up 4th of July, going down, and start to recover next week. Maybe that happen, maybe that not happen. The same we can see on the Nasdaq, 69, 69, 76, and 50, 50, 50. The Dow Jones is 92, is almost always be positive, and let's see what happened. But this is a percentage in Thursday, since 2011 is very positive. Since 2011 is very positive. That's important to know. That's important to learn about the market. So the statistics tell us that the next 3 days can be very positive. We have to be prepared. We have to doing good and go on. Now, just to close this thing here, on the economic calendar, there is nothing very interesting, really. The next week, the only interesting is the phone minutes. We have to pay attention. Normally, it's very, very volatile. It's the Wednesday, but the Friday is going to be close the market, so we have to be very careful how we put it our position. And that's it. Now, let's start to see it, the market. Let's start to analyze the market. But we have something very interesting. We have the 6 months. We close the 6 months, we close the 3 months, we close the month, we close the week and the day. We close everything this week. So that's why we're gonna see the graph, seeing the 6 months first. So here's something very interesting. We already have 2 years, 6 months, 6 months, 6 months, positive. We have here 2 years and a half positive. We have more season here. We had here more season, just only flat and go on, and look this time. So seeing on perspective, yes, it looks like the RTS is very overselling. It looks like the MACD sorry, is very overselling, but we continue seeing positive the trend is continue positive on both. So let's see what happened. It looks like it's going to continue seeing the next 6 months positive, seeing on this perspective. Now, let's go see it on 3 months. On 3 months, it's happened kind of the same. We going after this slide down, we continue going up. But it's not the only time that is happening this, we can see here that is continue up. We can see here that is up. We can see here that is up. So the trend is continue positive on the 3 months. We can say that is very selling, but overbuying, but no, not really. You can see here how they coming back, Yeah, it's coming here, but it's still pointing up, it's still pointing out, so it's okay. Monthly, this is when the stars start to come in very interesting on the monthly, and I'm gonna put it like this. Why start to come in very interesting on the monthly? One of the figures that a lot of the traders analyze is this figure that is the couple and handle. This is like a couple, and this is the handle of this cap. This is like a cap and handle. You can see this. cap and handle. And the rule of the cap and handle is that every time that this happens in the cap and handle, we use it and it's break up, this can go all the way to here. You know, that's why we had this, I had this line here. This is the line, the goal that I wanted. So in month candles, you can see the MACD is still trending up and the RTS is still trending up. So it looks very good actually. And the MAE also is see it that is start to speed this trending up. Let's see what's happened. This candle and handle is continuing up. The see it, we can see it this same, we can see it there here on the Q on the Qs. Let me draw in the cap. Okay, we can hit this, we can say this. This is the cap and handle, and the rule is saying that maybe we can go all the up to this point. That's why I had that to the goal. And the trending is up, the trending is up in the RTS and in the MACD and the RTS. You know, the trending is continuing up. Let's see how it's coming in the future. But right now it looks like everything good, everything fine. It looks great, actually, the trending. You know, it looks great. Now, let's go to see it this now on the monthly. This is the monthly. Now let's see in this on the weekly. On the weekly, you know, on the weekly, this figure that I have here is the market is going in up and downs. You know, I call there like buckles. Is going up and up, up and down. That's the way that the market is doing their job, you know. So on this up and down, and this here is mentioning to me when it's gonna be up, when it's gonna be down. So we can doing this, we going and can coming down here, but can doing here, or can doing here, or can doing here and go up, or can doing here and go up, or can doing here and go up. We don't know that. You know, we not predict the market. We not predict the market. With reaction to the market depends how they're doing. But something important that this resistance is holding. The resistance is holding, and we have two hammers on the hammers down. You know, we had two hammers down. We know that we are separate already for the average 10 line. This is the average 10 line. And every time that we going too far from the average 10 line, they're gonna try to coming back because they like to dance. The market like to dance around the 10 average 10 average line. They like to dancing. So right now we are kind of far away, and they're gonna try to going back. That's what we can see it also in the cues. Look, is two hammers down, and we had some distance. So, and we start to doing the movement back according to this. Maybe they can go in a little bit back and go on taking a speed from there. DIA is different. This is a triangle, and but this one is trending down. Okay. That's what we can see it on this. Now, the daily. The daily is a little different history. You can see here that is the kangaroo going up, going down, going down, going down. But not only that, we had a double top. Is this double top becoming true? Is this double top becoming true? And is breaking down from this point, going down, they can go to this target. Is this target here? This one. It can go down to this target. Is this double top is going down? This is the hour. The hour and the daily, we can see the RTS is trending down, the same like MACD is trending down. It's different history to the weekly, monthly, etc. So it looks like they're gonna doing a little pullback. maybe the market is gonna go in a little pullback, and after that pullback, they're gonna speed. How much is gonna pull back? That's the part that we don't know. You know, Kale pull back right away here and going up. They pull back going to here and going up, or they pull back like this and going down to this point. That's the part that we don't know. We don't know how good, how bad can be the pullback, but something that we know that is the market in the next week break down to this point. If they break down here or in the next candle, the next 2-3 days, if they break down here, the market most probably gonna try to go to this point. To this point, if they break down here, most probably is gonna try to go to this point, and from this point, let's see what doing can going up, or for this point can going and continue going down, doing this movement like this and continue going down. We don't know that part. The only that we know is they break down to this point, this market can going down. Is they going down here, we had to wait to break down this resistance. Is the market, after they do this movement, break up this resistance, the market they going to my goal here, or they can go to the goal that I have been up. We had to wait to that, or they can go here and doing another movement down. That's the opportunities. We don't predict the market. We don't predict the market. We waiting to see what the market is doing. Is doing this? If they start to break down here, I'm gonna take a position. That's for sure that I'm gonna take a position. Is the market going up? Is the market going up here, and here is bouncing back to up? Maybe I'm gonna take a position up, but I don't take the position on the SPY. I'm not doing that because the volatility is 0.82. Where I doing? Is the market going up? I take a position on this one. Lose the volatility, 2.35 is faster. Or is the market breaking down? I can take the position here. Look, lose the volatility. This going versus the market. This ETF is going versus the market. I can take and lose this volatility. I take it normally in more volatile scenarios, not doing here. Now, let me open here a little more. Let's see what it's doing. It lose. Let's see what it's doing now. The Bollinger Bands. In the Bollinger Band, we can see it that I start to go steady to the side, the same that they're doing here, steady to the side. So maybe it's waiting to the 20 average. Something that we can see it is the 20 average is continued down, the 5 average is continued down. If they break down, the 5 average break down, the 20 average, it means that the market is going down. Is the 5 average bouncing back in the 20 average, is mean that the market is going up. It's another way to see it, the market. We can see in the history that that's happened. Look, is bouncing, the 5 is bouncing in the 20, the market continue up. But here is not bouncing, it's coming, it's crossing, it is crossing completely, the market's going down. We had to wait to that movement on the market. Depends what the Bollinger Band wanna do. We had to wait, they going up or they going down. If they can go down, or we can go down, or they can go up. We had to wait. That's why we don't predict the market. We had to wait. If they going down and cross the 20 average, the market is going down. If the average 5 bounce it, the market is going up. That's the stuff that we have to waiting on the market. And that's important to know, because that helps us to put a better position. Now, this is the most volatile, the one that I show you. No, actually, is more volatile on the Qs. The Qs is the same. You can see the 5 average start to doing. We can see that the MACD is going down and the MACD is going down and the RTS is going down. We see that 1.13 average. I don't trading on this one. I trading on this one. You know, the QQQ look 326 is more volatile. What it means is being more volatile. That the market in 9 days, in 13 days, they can grow in 24.81%. That means more volatile. Versus the QQQ, that in the same days, from here to here, in the same days, the same 30 days is only 7%. So the other ETFs is faster, 3 times faster. We can win more money. That's what I traded on the ETF, more volatile ETF. So, but we had here the same situation. Is this thing going down under the point 20? Probably the market going down. Is the 5 average bouncing? Probably the market going up. And we had to weigh the same. Is this going down from here or is going down up from here? This is the support, this is the resistance. If they break down, this thing can go all the way to here. If this bouncing back, can go up here, and this break up here, they can go to my goal here or to my goal that I had more up. That's the thing that we had to be seeing at the market, constantly. Is different to the DIA, the Dow Jones. The Dow Jones, actually, we had the 5 average that just crossed the 20 average. The 20 average start to get the direction up. So maybe this going, and here the RTS is going up, the same like the MACD is going up. So probably this is going up. And it's the same that we see on the Russell 2000. The Russell 2000, I had this resistance. If this resistance break up, probably going to take the position because the MACD and the RTS is telling me that maybe they can continue up. Let's see what happened the next week on the Russell. On this channel that we have here, it looks like they start to breaking up. It's good to take position. On the DIA and the Dow Jones, we had to wait to break in this triangle. This triangle, if they break up, we take position up. If they trade down, we take position down. That's the way to do in the market. You waiting what they're doing, the original ETF, and I trading on the for fast movement ETF. And there is ETF also to this one. I'm gonna show you. Microsoft is a little like pointing down. We had to wait until on Microsoft is going down this point. Actually, we don't have to wait that much. Is this 0.5 going this and this going in this way? Probably they're gonna try to bounce it in the average 20 or not, like here, or like here. We had to wait what they are doing. It looks like they wanna bounce down, bounce back. Apple is already in the channel down. So if they continue going down, they're gonna try to meet the 20 average. And they're gonna try to meet here, maybe bouncing. Let's see if they continue with this trend down. NVIDIA right now, it looks like the average 5 is crossing down the average 20. Be careful, is this pass to this line? This going down to the 25%. We had to be careful on this. Amazon, it's putting me a candle red. Can tell me that this Amazon is going down, but not necessary. Not necessary because the trend on the RTS, the trend of the MACD is up. So probably they only try to pull back to the 5 average, pull back to the 20 average, and after that, continue his direction up. Google, the same note Google, it looks like the trend is going up. Let's see if they going to the 20 average to bounce them back. Meta. And Meta is the same. You can see the trend going up. You can see the trend, how it's going up. Let's see if they bounce in the back on 20. But if they cross under here, this resistance, so it's going to be a fake break up as they're going to coming down. In Tesla, they have a different characteristic because they have a leg shoulder, they have a inverse head and shoulders, which is means that is doing this movement. The target is here. If Meta, is Tesla cross up the 200 average, is gonna try to meet this point. That was something that we wanna see it, right? But like I tell you, I don't trade in here. Also Tesla, also Nvidia lose the average that they have, but I don't trade in on them. If Tesla going up, I gonna take position on this one, lose the average of movement, 6.73. What it means that? It means that the movements here, it was 24% in 11 days. If they continue trending up, it's gonna be a very good opportunity to get a very good money all the way up. Nvidia, right now it looks like they wanna go down, so I wanna take one versus. The versus Nvidia is this one, 11%. So if these things continue going up because it's in versus, is Nvidia going down, this one going up? Is this going up, just to get some perspective from here to here? It's 36% in 7 days. Just to give you some perspective. This moved fast, but we had to wait until tomorrow or Tuesday to see what this is doing. That's the way that I traded. I wait into the movement of the market. It depends the movement of the market. I take it faster volume, faster ATR, faster ATR, and I trading with that. That's the way that I win money, and it was good. On these last 2 weeks, I win. 1 week I win like 7%. The other week I win like 3-4% on my total capital. It looks very good. Let's see what happened. We had to wait until next week, but remember, if they start to break down the next week until this point, probably the market is gonna visit this point. It start to breaking up, probably is going way up. We had to wait to see what happened. The Wednesday is the phone minute. It's 4th July, the Thursday, and Friday. Let's see. That's it for today. I love you. I hope everybody understand or kind of understand what I try to say. Well, that's it. And see you next time.